turn it all right. So I'll just run through again because of those that watch the replay or those that are not here at the moment. Good evening, traders. So we're going to run through this class in the next hour. All right. And we are here for a purpose. I'm going to share my slide very quickly and run through what we are here for. All right. So just let's go right to the point, right? So just a little bit of from the flow of thoughts, right? You're going to learn how to earn between 1 to 5K per month from the Forex market. And we're going to have a live case study right on in this class. So you're going to see it's real, it's possible, it's obtainable, and it is achievable. You can achieve it. And of course, but the topic we're going to niche down into is how you can become a full-time trader. So it's not just about earning, say, 500, 1,000 bucks and all that. It's how you can be a full-time trader, right, without ever worrying about blowing another account. Now, that's such a bold statement because most of us here have had terrible experiences in time past that would make you want to look double double check claims like this, but you're going to find out how that's possible, right? So just pay attention. And so my goal here is simply like what we said earlier to drive home the point of how you can become a full-time profitable trader, right? And because we want to look at not just profitability but consistency, not just profitability but consistency. Now, if you stay to the end, I'm going to bribe you ethically, right? And it's going to be for 5 persons. But at the long run, what you're going to benefit from this 1 hour class, right, is going to change or twist the way you look at the financial market, right? Now, you might be wondering who's speaking, and all of those, we are going to get to that part very shortly. Now, what makes this meeting different? You can see I'm running with a speed because we've used up 12 minutes already. So what makes this different is because it's practical, and that's period. So I know most of you must have attended several seminars, webinars, whether the person is live or is pre-recorded, notwithstanding. Most of them ends up being just a sales speech or whatever. So trading is not like that, or rather, this particular session is not like that. We will be 100% practical. Very soon, I'll be jumping into my MT4 and discussing a few stuffs right there with you. All right. So it's a practicality that makes a difference. So before we go on, I was trying to prepare this slide just before this meeting. Don't mind me. I've had a very busy week, not just for trading, from other stuffs, life generally. So I couldn't really put a picture of myself right there squarely. Okay. So very quickly, whose voice you're listening to? I'm Jay Okoli, a full-time trader. I've been trading since 2019, right? And of course, multi six-figure prop firm trader. Of course, if you don't know what prop firms are they are companies, for example, that gives traders equity or startup capital to trade, so long as you pass certain tests or certain criteria. Now, the bulk of the criteria is niched down to how well you're able to manage your risk and how well you're able to profit with their money. So in a layman's language, prop firms are people who has money that are willing to give you for you to trade for them. For example, we have the FTMO.com, FTMO, My Forest Fund, Funded Nest. There are so many of them, although there are some shady ones nowadays. But the truth of the matter is that if you, like I call the first two, FTMO, My Forest Fund, they are very trustworthy. Has been in the space. I started trading FTMO since. I'm going to tell you about myself then, definitely. But just for those who are new to the space, because for you to make 1,000 to 5K per month trading, you must have a very good capital. So it's not that I'm not telling you you want to make $1,000 and then you're having a $10 account. No. So that's where we're going to prop firms. So I just mentioned that because of what you see at the second slide. So we have trained over 2,400 traders since 2020 when we started, especially Africans, right? Of course, got married 2021, young to my young pretty wife, right? I'm living my best life. Okay, now because of personal and religious belief and standard, I do not personally like flaunting a whole lot of stuff. People are moved by what they see. People are moved by results. Of course, I am not against results because if something works, you should be able to show it works. Now, I like flaunting instead the results of my students. I like flaunting instead results of my in circle and a few of them. So Many times I'm not the typical forest guy that will be on the Lambo in the Instagram, all of course. It's one of those misleading stuff that makes people think they can just click the mouse and become rich or wealthy overnight. And most of you who fell for all of those, you know your experiences right now. So I choose to be different. Now, where it is necessary, proof needs to be given, shown. I'm not against that, but flaunting that for the sheer purpose of, come on, you are not in competition with anybody as a trader. It's you versus yourself, becoming a better version of yourself. So it may not be one of those webinars where you're going to be seeing the foreign trips, the yacht, the all of those stuff. If you're not going to believe based on the knowledge I'm going to impart with you right here, you will see right practical stuff. Then I'm not sure anything else can actually help you. So let's go ahead. I just use that to say other things you are going to see. Of course, I'm an author and a coach, and I'm soon going to be working with most of you on the long run. So let's continue. So I have done a lot of things right, obviously from the a little things about me, but I have also done plenty things wrong, right? Especially with respect to my trading journey. Okay, and I will really spare us some details regarding my journey. But I feel many times to drive home our point in meetings like this, it's always important to tell just a little bit of where you are coming from. So your audience, that in this case, you can actually identify or relate, so that it's not just somebody falling from Mars or Jupiter trying to express his or herself in a meeting. So there's that importance of relativity, and I'm going to give us just a few to save our time in this meeting. Now, my first 4 trading accounts got fried in 2016, right? And of course, the picture here wasn't, that's not me, definitely. It's one of the seminar we ran, ads campaign we ran, right? So, and after my first 4 accounts got fried in between 2016 2017, I discovered a few things, and I will share those discovery with you, right? The first thing I discovered is that trading is rigged and manipulated against the retail trader, or better still, the ill-informed trader, right? And this is a very important point. So we understand that the financial market, which means forex, crypto, volatility, financial market that involves buying and selling or trading, every day, Monday to Friday on forex involves a $5 trillion open float. So every day, Monday to Friday, Forex alone, there is $5 trillion open floats exchanging hands in the financial market. Some are losing, others are gaining and profiting, right? So the first thing I discovered in all of my first earlier years of burning account left, right, center is that the ill-informed traders or the retail traders are my emphasis is not just because we are all in the retail traders category. The emphasis is on the ill-informed traders who doesn't know what this is all about. And I'm going to tell you things that may not be conventional to what you have known, right? To what you have studied or you have read about before. And this is just the truth, right? And the second thing I found out is that you don't need a strategy that has a win ratio of 70% for you to be profitable. So when I got started in 2016, a little bit of my story, when I got started in 2016, I went through all of the course, all of the materials I could lay hand on, right? From trend line to Fibonacci to support resistance, demand and supply. I mean, everything I could lay my hands on. Now, what was my reason for all of those multiple studies was because I wanted to get 100% win rate at the time. If I was not correct about a trade, I don't see a reason for putting a buy or sell. If I know that this thing will go and hit my stop loss, at the time, I thought there was no reason to place the trade. Okay, so I wanted a high strategy to win, to profit. So I started going from left, right, center. I think I don't have a slide to show my earlier screen. I mean, I should be keeping some of those records, but it's terrible, right? Having so many things I was looking at for the market to put my trade and all of those stuff. And I discovered that I was horribly wrong. In fact, some of the best traders today because the key word for this seminar is consistently profitable, not just profitable. You can be profitable by chance, by luck, earn $1,000, and then the next week or day, you've given it all back, right? My issue or my query is consistency, all right? And I thought earlier that I needed a strategy that does 70%, 80%, 90%, right? But even at that, I was terribly wrong. And I wanted to say that one of the greatest traders, or some of the greatest traders you would ever discover, and I'm going to prove some of those stuff to you, probably a little bit of that tonight, is that they don't even have up to 40% win rate profitability. So what keeps them ahead? What makes them consistent? We're going to discuss that in this class. So it's more practical workshop, if you like. And finally, I discovered that trading is more about your mind than your strategy. Trading is about more about your mind than your strategy. Listen, my friends, I know most of you are traders already. I want to do a quick drill. If you are in this live call and you are a newbie, you don't know anything about trading at all. This is the first time okay, I just want to trade Forex. I want you to type on the chat box, use type 1, so I know you are a newbie. But if you have had some experience with trading before, you either whatever level you can trade, give me a 2. Type 2 in the chat box right now. So if you're a newbie, absolutely new, let me know my audience. I'm introducing myself to you, so let me know who I'm speaking with. Give me a 1 if you're new. If you have some experience, whether you are pro, intermediate, whatever, go to the chat right now and type in 2. Right. Okay. I'm seeing the 2s. Excellent. 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 Great. Just I've seen a few persons responding so far. 2s from Cape Town. Amoni, welcome. All right. From Cape Town. All right. You're welcome. Ethel. Okay. Okay. Let's keep, if you haven't voted, if you haven't submitted a number, I would need to have as many as possible. Okay. So I can know my people I'm speaking with. All right. Great. Excellent. Excellent. Thank you so much. All right, great. So more of the 2s have it. So I'm happy to know we have more persons who have some experience with Forex already. So this third point, like I told you, was the game changer for me. Trading is more about your mind, more about the mind than the strategy. Now, you're going to see how that comes in, because it's in my opinion the most neglected part of trading, yet the most important. So we're going to discuss. Hence, I say more to come. All right. Oops. Just a moment. I hope I'm not going to have these slides giving me itches. Yeah. Okay. I'm going to cut off all of these SSs, but please don't play with my flow. Please bear with me, right? You know, things like this happen. Bear with me, bear with me, bear with me. And I'm loving this flow. So I'm going to go back, right? Just give me a moment. I'll come back. I'll come back to the slide. Okay. Okay. All right. So I discovered all of those things I said earlier back. I discovered all of those things I said earlier the hard way. So while I was struggling to get a strategy that works, like most of you most likely are doing, trying to get any stuff that you feel is trending, come on. The more I do that, in my own experience, the more I was actually, as it were, not finding. I was not just finding what worked. I was not just getting the results. I would make, so it's as if some of the strategy I would apply, excuse me, maybe profitable for like a week, 2 weeks. I'm excited. At least I'm enjoying the roller coaster. Then all of a sudden, I'm in this losing cycle. Have you ever been in that losing cycle where it seemed like nothing you touch works anymore? So it was terrible. And what was the hard way? The tough way is what I just explained. Tried using multiple indicators, moving averages, MACDs. I was frustrated several times because at the time it's going to work, at other times it's not proving, and crazy, crazy stuff like that. Then one of the worst experience I had was trading with bots. Have you ever traded with the bots before? Come on, no matter how you paint a trading bot for me, I am never going to buy that shit. Sorry about the foul language. I am never going to use a bot, because one of the down points in my trading career, 2016, 2017, was I recall using a $200 account. I think that was about my second account. Borrowed money at the time. I was the head of the gang. Got a bot from an African fella. I cannot recall wherever country. Not important at the moment. Put the bot in the to trade the account. By the first 2 weeks, I was almost up 50%, and I got excited. In fact, I already started living my dream life from those results. Then I recall vividly there was the FOMC news. And by the way, as at the time of recording this meeting, this class, there's going to be FOMC next Wednesday. So you want to be careful about that. We're going to talk about that, right? So long story short, FOMC, I was in my school then and I was up 50% and I went back to check the trade in the evening. I saw the long candle. The bot did not take me out. It didn't take my stop loss. The account drew down to zero, even negative values. It was it was my worst experience. I didn't know who to, that kind of experience. I don't know who, all right, but blew my account within 1 week. Thank you, Charles, for confirming. At least I have some prices. It's crazy what bots can do, right? It's crazy, right? It's crazy. So most of us have experiences. That one, I can't forget it, even though I have long passed that experience, right? Uh, so that was a tough one for me. It seems I will not be touching this slide. I will just be going straight. I think that's what it wants. So I'm gonna just go. So, and another thing that was my issue at the time, the tough way on that thing, I accumulated a lot of mentors, right? I know you can see my screen right now. Accumulated a lot of mentors, got lots of courses, all right, till I got disorganized. Have you ever been there, my fellow traders, where you want to trade, analyze, but because you have so much knowledge in your arsenal, you do not know exactly which would apply at where? It's crazy. You have a strategy for a ranging market, you have another strategy for a consolidation market, then a time come you are shocked because you don't even know which to apply, what to apply. It's simply crazy. I mean, a lot of things traders go through, right? And we're not here to go all about the downside. And I'm going to tell you for fact, set of persons that tradings are for. We're going to discuss that when we get to start looking practical stuff. Okay, if you're going to discover in this class if you are going to be a trader, a successful one, and there are few indicators for you to know. And I would advise you don't have to fight it. You may not be able to. Let's just continue. So in the past 4 years, I've been through the trenches and I'm back, and I wish to share my journey with you with the hopes, right? This is my hope for this class, that I'll be able to help you win too, all right, despite no matter your experience or where you have been coming from. Okay. And so, like I said, for those of you that joined in late, I do not like flaunting more of my whatever and all of those stuff, but just in case you need things to make you know that we're not here for the plays, right? I think I shared one of the screenshots with us, those of you that were earlier in the WhatsApp platform this week. This particular withdrawal at the middle, 3.7 million naira at the middle. You can see by the far left of your screen, a trader of ours got funded in funded nest. That's the Profem account. You see the midpoint, you see our entry. Now, to take trades like what you see at the second on screen is what you're going to be learning tonight, right? And if you ever imagine, does Forex pay? Is it a gamble? Is it scam? Is it whatever? Just for the new big corner? No, most of you are already veteran, knows that this is legit, this is confirmed, right? So just in your screen is for your peruse with your own study. And some of these trades, actually the last two, right, we're gotten with what we traded this past week, right, before this meeting, and we are going to analyze a few of them right here. While the last left a student that attended one of our classes testifying. I don't really have time to go through all of those. Even if you're watching the replay, you can pause this and go through anything you want to see. We don't really have time for all of those. So there are three secrets. Now I'm very skeptical with the usage of my words, secrets, tools, all of those words. But I don't want to sound misleading in any way. Honestly speaking, trust me, I don't want to sound misleading anyway. If this is going to work for you, I'll tell you. And that's why I'm going to tell some persons whose category, I may not call your name, but I'm going to speak out to some persons who trading may not be for them. And you don't need to fight it, right? I'm going to say some of that thing. Recently, I shared in my timeline on alternatives to earning online, and some person already doing that, right? But we're not here for that. Let's go into stuff. So when you see the word secret, I don't want you to start thinking. All right. So if you can hear me, I'm sorry about I got a call and I have actually silenced that. Don't worry, no matter what the class we hold, and we will arrive at our destination. Okay. So if you can hear me and see my screen, I'm happy to know some people can hear me, but I'm sure you can see my screen as well. Just give me one if you can see my screen and hear me, right? So I can continue and speed up. Type 1 for me if you can hear me and see my screen so I can continue and speed up. Okay, thank you so much. Thank you so much. So I was talking about I do not like I don't want to use the word secret because of it I don't want to sound misleading in any way. So but however, for the purpose of this class, to some might be a secret, but everything you're going to hear and see tonight are not actually secrets. So let me debunk some of the stuff you see here. So just follow me. But on becoming a full-time trader, maybe I would say point that I'm going to re-emphasize to help you. All right. Number one, you must understand the psychology of trading. I'm going to spend a huge chunk of the time talk about the trading psychology. There is a way the trading, the financial market is built. Now, if you don't think that way, you are going to be the meat, right? You're going to be the ones, the people that think that way. You're going to be the one that we used to do take profits. All right. And there's a psychology about we're going to dig into this, and this is super, super important. And you may find that after this call that you may not need another strategy other than what you already have, right? You may not need another mentor than the ones you already had before joining. You just need to work on yourself. And it's amazing what this can do for you. Very important. So it's not about getting any new stuff. The psychology, we're going to come back to that. The number two secret I discovered is that you must understand the true market structure so you can buy and sell appropriately. Of course, we know in trading, we tend or we hope to buy at the low, right? And make profits when price evaluates or goes up. And we hope to sell at the top so that price can devaluate in any contest and make profits. So, however, there is the market structure that we all know about, but there is the true market structure. And again, when I start explaining some of this stuff, you are going to see how you've seen this stuff happening over and over again. In fact, there's a trade I took today in Arbitrum USDT. That's a crypto pair using exactly what you're going to learn tonight. So you're going to see that it's not this rule applies in any financial asset class, whether it's forex, whether it's crypto, whether it's volatility. It applies everywhere. But you must understand the true structure of the market. And then finally, um, your entry is everything. All right. When you enter the market is everything. So you must understand that your entry when you are buying or when you are selling, it's about everything. When I say everything, it's in the context of you actually trading. The secret number one is you before you trade. Number two is number two secret I explained there is actually during the trade, must know the structure. Number three is when you are already in the trade. So before, during, and when you are in and after, and all of those. So if that makes any sense to you. All right. So you can see how I compress these three things because, and I'm going to explain them one after the other in the next couple of minutes that we have in this meeting. All right. So what is the psychology of trading? What is trading all about? Let me see. I've lost train of my slides. All right. Okay. I'm in order. So you've heard my story. If you join in late, no problem. You can get the replay. You've heard my story, how I started in 2016. But one thing I didn't tell you then was that when I started in 2016, the thought I had was I was fascinated with the idea that you can just click a mouse, right, and buy or sell whenever you like and make profit. In fact, the very first trade I took, I can never forget that trade, a Euro USD trade in 2016. I was in family house at the time, right? And I placed the trade, not even knowing what to do, what I was doing. By the following day, I was up $56. You know, there was this broker then, Insta Forest. I don't know if they are still up right now. Insta Forest. At the time, they were giving a $500 demo kind of account. So I took that account, took the first trade, sell or short euro dollar. By the following day, I was up 556. I was up $56. And I was very excited. So I wanted to make a withdrawal. I wanted to make a withdrawal, and then I recalled the what's it called now? The admin or the customer service telling me that I have to trade exactly, I have to deposit exact amount that I have profited, and I have to trade at least one lot size. And I can recall myself asking the customer service, what is the meaning of one lot size? How young was I? How naive I was at the time? And then of course, they couldn't. That was the policy. I have to deposit at least $50 if I'm to withdraw $50, and then I have to trade one lot size. Of course, I was not trading up to a lot size at the time. So trying to why the matter was lingering, I put in more trades, and the account blew I blew that account to at least was it about 300 or thereabouts dollar, and that was the story. That was the end, right? So why traders fail? I may not have the slides right here to talk about everything, but trust me, I'm going to drop a few gems because I want to explain the psychology of the market in just few sentences. Now, whether you like it or yes, every time you buy or sell in the forex market or any market or asset class, there are people at the other side of your trade that should either support your idea or reject your idea. So if you are buying any asset class, you should have other buyers supporting your ideology of buy more than the sellers. So once the asset increases in value, because more people are buying, you are going to make profit. I don't know if you understand what that means. So, and how do you know that if you are buying, for example, Euro USD, you are going to have support from other traders around the world or more traders buy with you to make profit? How are you going to know that? Zero. There is no way you are going to know that. Absolutely no way, right? And if you are selling, the market goes in your direction, more sellers are in your favor, they're actually supporting your idea. That does not mean that people are not buying the opposite end, because you see, trading is a zero-sum business. All right. Zero sum means if I am buying one lot size, somebody at the other end must sell one lot size. So it's a balanced sort of business. So how am I going to know that I'm going to have more buyers support my buy for me to make profit, or more sellers supporting my sell to make my profit? Zero. No way I should know. So what does that mean? That means to me, right, whether if I am buying and trade goes in my direction or comes against me, right, it has nothing to do with me. It is absolutely out of my hand. And I will say that one more time. Trading is not about you being right or wrong. It's not whether your strategy is right or wrong, or your technique of entry is right or wrong. It is absolutely out of your control. It is absolutely out of what you can do, because there are people at the other side that may not support that movement, your trade at that time. So should we now, but where traders have problem, like myself earlier when I started, is that we want to be right every single time. So we tell ourselves, right, if I am not going to be right, I don't see a reason to trade. If this trade is not going to go my direction, then why should I buy? If it's not going to go, why should I sell? So we want to find out everything to be sure that it's going to go our direction. And when we eventually pick the trade and it goes against us, guess what happens? We get dejected. We feel betrayed. We feel downcasted. We feel terrible, right? And then our emotion gets messed up. Okay. So I'm going to stop here along the line, but from the very first foundation of always trying to be right, I am going to the market to be right, is already a problem first as a trader. And not until you come to the point of trading mechanically, and I'm going to talk more about that before we wrap up. Not until you come to the point of trading mechanically, like a bot without emotion, you will not find success in trading generally, whether it's crypto, whether it's I'm currently 3S up in a particular trade on crypto. It's called degen trading, right on in this call, right? Now I have taken my capital from that trade, and I'm allowing the other ones to moon or bust. That's kind of a very terrible sort of trading. That's crypto speaking. But I'm using the same psychology everywhere. So what does that mean? Before you enter a trade, you are like, let me give this a last analogy, right? Imagine you are having a coin that has two sides, the head and the tail. And then your take profit is your head, your stop loss is the tail. Now, you are asked to toss the coin 10 times. That means you're trading 10 times, for example. Now, what do you expect will happen every time you toss the coin? If I ask you all to unmute your mic, you will say same thing or different thing. You will say, I expect the head because that's take profit. But the truth of the matter is that the chances of head to show up is the same as tail to show up, because it's a coin of two sides. So if I'm going to throw it 10 times, what is the probability that I'm going to have all head 10 times? Zero. Try it. If I throw the coin 10 times, what's the probability I'm going to have only tail 10 times straight? Zero. But what is the probability I'm going to have either head or tail? It is 1. That means yes. So head mean your take profit. I'm teaching you the probability and I'm teaching good. Something that didn't like mathematics. Oh God, you left mathematics class. Okay, let's go on. So head being your take profits, tail being your stop loss, right? If you toss the coin and head shows up or tail shows up, were you right for you to have a tail showing up? If you have the mindset that is either going to be head or tail, were you right if tail comes up? Yes. If you have the mindset that it's going to be head or tail and you toss the coin and head comes up, are you correct that head comes up? Yes. Right? So whether it's head or tail, you are correct. That's how trading should be treated. Whether your stop loss or take profit is hit, you are correct. That means it's in expectation. So you may not be wondering, so what is now, why are we not doing this if that is exactly what the consistent traders know. They do not trade or determine their career based on one single toss of the coin. You don't want to be trading just or determine whether you are a good trader or you're going to last with just one trade. You want to be trading in sets. You want to be trading in batches of 10, 20, right? That's number one. You don't want to trade just one and say, I am wrong or right. No, you're going to be determined now. If you are already a trader, this is a task for you right here. I'm going to give you a task like a coach already that's going to help you. This new week that opens, whether you are demo trading or live trading, tell yourself, follow my rules, apart from the one I'm going to show you right now. I'm going to follow my rules of entry and exit, but I'm going to just trade 10 times or 20 times. I don't want to know whatever you want to trade. And I'm going to document all of the outcomes, stop loss or take profit. I am not moving anything from break even or whatever, either stop loss or take profit. And I'm going to document it for 20 trades. I don't want to know how long it's going to take you. But listen, if you are going to do this drill, your life will completely change. I'm going to give you the other part of the twist that will make it work for you. The twist that will make this work for you is maintaining a healthy risk to reward ratio. That means for every trade you take, your stop loss at least 1 to 2 or 1 to 3 works perfect. So maintaining a healthy risk to reward ratio, 1 to 2 or 1 to 3. Sorry, there are no slides on this. I hope you are gaining something, Sha. Right? We'll move to the next and the final, and it will be done. So maintaining a healthy risk to reward ratio, right, is the twist. So I am not for 1 to 1. I am not trading 1 to 1. Any trade setup that gives me 1 to 1, I am not up for it. I am at least, personally, I do 1 to 3. Any other thing can fly, right? Excuse me, 1 to 3. So that is the twist. So fine, good and fine. I am not setting off the outcome of any trade, because here is something I didn't say when I was giving the head and take coin. Do you know that even if you have a strategy that is 70% working, 70% working, that means if you throw a coin 10 times, there's a probability you are to get 7 times take profits and 3 times stop loss, right? Let's just assume it happens that way. Assuming, no. Good. Now, do you know that 3 times that can hit stop loss may happen the first 3 times when you trade? 1, 2, 3, the tail will appear, and then it is all stop loss. But you see, if you do not think in form of sets, you think in form of individual trades, you may not be able to last long to trade the fourth trade. Why? You're already demoralized by trade 3. You already feel betrayed, and you already feel this is not for you. You're already cursing and all of those stuff. And that is the problem. Why is it that with all the technical skills today, with all the things you know, trend line, all the knowledge that some of you have, not everybody, sorry, I'm sounding a bit hard, with all the knowledge, technicality that you have harnessed over time, it seems like it's still not working. You see, and more strategies, more book, more courses will still come. You see, but this idea, right? And I will recommend Trading in the Zone by Mark Douglas or The Disciplined Trader by Mark Douglas, right? I mean, we're going to talk about a few of this stuff. Let's just go on. So, if you are getting anything so far, if you feel a little bit of spark, please can I get a yes or a one? Is a way of letting me know that we are together. You're not sleeping on me, right? A yes or a one. Great. Oops, am I just touching one person? Okay, it's important. Yeah, so I can know we are following. Great. Thank you so much. So let's continue. We have a few more minutes to go, right? Okay. Oops. I'm going to come back to my slide. I'm going to come back. I'm already learning to use this thing. Okay. All right. So why traders fail? I've mentioned that, and um about discipline. You are trading singular pairs. You are focused. Blah blah blah. Especially what I have mentioned. Oh, I did mention. Man, I think I am still not getting used to this slide. Please, you're going to bear with me. I'm actually not this um seminar kind of. Just give me a moment. Just give me a moment. Let's resume. Okay. All right. I hope it works now. All right. So secret number 2, we said you need to understand the true market structure so you can buy and sell appropriately. And I'm going to head over to my Zoom board and teach 3 things right on in my Zoom. So let me turn off this, right? So the true market structure, I'm going to use both my Zoom, the screen on Zoom, I mean the whiteboard here, and then I will go to my MT4. So let's get a bit more practical. So of course, you have known before now, whether you are a newbie, you know what they call uptrend, you know what they call downtrend, and also so we say we know uptrend when you see price doing a higher high, higher low, higher high, higher low. That's uptrend, and you want to buy in uptrend. We know if you have a lower high, lower low, price is doing this kind of movement. We said it's downtrend, and you want to sell in downtrend. So this is basic market structure or structure 101. All right. However, there's a little bit of advanced market structure. Now, before I talk about this advanced market structure, I am going to share a light to you regarding candlestick. Every individual candlestick you see in the market space, right? And because I'm going to teach you about 2 things that drives price action, 2 things that drives price action from the algorithm or the bank point of things. But before then, let's look at candlestick. Now we know every candle, whether it is up close or down close, have similar analogy or they are related in their analogy. By that, we mean every candle has where it's opened, right? It has a low, it has a high, and then it has a close, right? So let's call this the first candle, which is an up close candle or a bull candle. I'm going to be very fast with this, right? So an up close candle or a bull candle. So up close candle has the open right there, the low right there, the high right there, and the close right there. Now, no any time frame, right? There's no special time frame. Price is fractal, whether it's a daily, weekly, or monthly, any time frame, same candle. Of course, we know we have the other candle, the red or bear candle that we open at the top, open right there. It has a slow right there. It has a high right there. This is it's low and then closes here. So it's just opposite of each other. Now we know that about candlestick analogy. Now the market is designed to trade efficiently. The market is designed to trade efficiently. By efficiency or by efficiently, what we mean is that when you have a candlestick in a downtrend, price is coming down, and then you have another one coming and following it, it is going down, for example. Efficiently means that these 3 candles should interact with each other. So they shouldn't stand alone. They were not designed or made to stand alone. All right. By standing alone, we mean where you have spaces between the candles. So there should be interaction between every candles that follows each other. And the way this interaction works usually is that, say these candles that goes down is 1, 2, 3, call them 1, 2, 3 candle. The way they interact is that the low of candle 1 and the high of candle 3 should interact through the body of candle 2. I'll take that one more time. The way these sets of candles should interact is that the low of candle 1 and the high of candle 3 should interact through the body of candle 2. And once this occurs, and which it should occur, you refer to the market as efficient trading. You can say the market has traded efficiently. Now, this is true not just in forex, any and every asset class, right? Of course, if you are going bullish, it's the same thing. Candle one, candle two, and candle three. If to say it to know how this whether this market has efficiently traded, the low of candle three should interact through the high of candle one when you put that line through the body of candle two. I'm going to show you real chart. It happens every time. So what that means to us, right from here, I'm already showing you how to enter a trade, right? How to enter, for example, a trade that is, you know, is going to be powerfully bearish. How do you enter, for example, say you are you see price right there and you expect price to still fall all the way to the downside. What do? Probably the current candle you see, red or whatever candle up there is like this. And then you have another candle. Of course, the previous candle would have interacted. And then you're having a new candle painting like this. Maybe it's opening right there. You may want to put a sell limit at the top where this previous candle's high ends, expecting this new candle to go over there to balance. A sell limit will take you right there, and then you are in the trade. This right here is something about among the big two I'm going to teach you about. I'm already teaching you about. I don't know if that makes sense. Don't worry, I'm going to show you from screen, right, from the chart. Now, there could be discrepancies due to one or two, right, in the market. And say you have three sets of candles like this. Usually we said candle one and candle three should overlap through the body of candle two. Now you have a fourth candle, for example, that did not interact with this, in this example, now second candle. Say this is the high of the second candle, and this is, sorry, that's the low of the second candle, and this is the high of the fourth candle. Now, say there is no interaction, it leaves what we call in the market imbalance, right? ICT will call it fair value gap. It leads what we call market imbalance. So this space right here is a market imbalance, and the market cannot go on, right, in normal condition. In clause, put the word normal in your mind. In normal condition, the market cannot go on leaving that imbalance. It will always seek to rebalance that imbalance, right? And this is already a trading strategy. So when you see imbalances like which are very easy to spot, you can actually, and you are sure the market is bearish, you can actually put a sell limit in that space or imbalance, expecting the market to come up there, rebalance, and then continue the downtrend. Now, what I just said gives you two sort of trading opportunity. Let me make it very, very clear for you. The first one I said is market imbalance. So I have this set of three candles, right? And then we have this like this interacted nicely. All right. And then we said if we are sure price is bearish and then price is down there or is painting already, and we have the high of that previous candle around that area, you can actually put a sell limit at that high, expecting this new candle to go over to rebalance and then continue the bearish movement. That's one. The number two thing you can look or think about immediately right here is, what if you spot an imbalance following what I just told you about or what I just explained, right? So you still have your set of three candles, 1, 2, 3, and then you have this gap between candle 1 and candle 3, that imbalance. And then price went on, and the price started giving you signal that it wants to be bullish to come back up to fill an imbalance. You look for a reason to buy right here, and price comes here. You take your profits in that area, or you can take profits at your imbalance. All right. Are you seeing? Now, I know for most of you it's vague because I'm not showing you live. So I'm going to do that right now, but I just want you to see how right from this first explanation, you can get a model that you can be trading with. Your trade model can just be imbalances. Look for imbalances and trade. And I tell you for free, this is one of the stuffs that I love so much. I'm going to show you one of my favorite strategies in these imbalances. Now, the second thing, why we came here is to discuss the true market structure. But you cannot know market structure without looking at this candlestick that forms the structure. So this is a bonus for you. Now, the second thing you want to know before we look at the real or true market structure is liquidity. LQDT. So you can spell liquidity. Liquidity, of course, simply is the life or the, like if you have a car, right? The fuel for your car is likened to the liquidity, or what liquidity means to financial markets. Liquidity is the life, or is the blood of the market. Now, my mentor would say, of course, ICT, he would say, if you cannot detect a liquidity at the market space, then you are the liquidity. You are most likely going to be the liquidity. And it's very simple to know what liquidity is all about, or where the liquidities are in the market. So what we simply mean by liquidity in a downtrend, like we have shown, typical downtrend, every swing high, behind every swing high is liquidity. What does that mean? If you are selling this market, you are selling here, and you're putting your take profit here, where are you going to put your stop loss? Here, right? So because your stop loss would most likely be in that area, that is a liquidity pool, right? That is a liquidity pool. So the market will always seek to take out liquidities. So I want you to have a knowledge right on in this class. The market moves out of, okay, have I given us examples of liquidity? I gave us swing highs behind swing lows for an uptrend. Please mute your mic. If it's time for question, I will ask you to ask question. Every mic should be muted. Let me mute everyone, please. Mute your mic. Ensure you are muted. Very important. So I will not lose my train of thought. So behind every swing lows are liquidities. Now, if all of today's trading was like this, right? This is everything that happens today. By the next day, assuming this is the next day of the trading, the highest point of yesterday being today now, there's a liquidity resting there. The lowest point of the previous day, there is a liquidity resting there. So behind previous day's high, previous day's low, previous session high, previous session low, and all of those. Now, you do not need to have double top before you know liquidity is resting there, or double bottom. Say, okay, this is a support area. No. Major swing points, which is why I want to explain structure tonight, right? And I'm going to give you one strategy that, honestly speaking, if you are going to, if you want a strategy, if remember when we started, I said it's not about strategy per se. You just need to have a winning edge and your risk, and then think rightly, right? But if you will allow me sell a strategy for you, that when I say sell, not money now, give you a strategy you can actually use, that has a very high percentage of win, is what I want to share right now. Are you ready for it? All right. Can I get an arrow to show ready? Because I'm going to give you the picture of it. So type an arrow to let me know you are ready. I'm going to give you a picture of it. I'm going to go to chat and explore it, and you'll be amazed, right? So let me get an arrow to show you ready, or a full arrow. It's important we participate. We're about 16. There are some persons are here already, but I needed to know how many persons are following. So please go to the chat, give me an arrow, a ready, or whatever you want to type. Okay. Oh, come on. That's on fire. That's on fire. That's on fire right now. Okay. So here is the idea. Before I give you the strategy, I want you to take note of two things I have spent time to teach tonight. The first thing is that I taught what ICT will call fair value gap, right? Or market imbalance. And then I just explained liquidity, or I just talked about it right now. Now, in liquidity, I mentioned that if you cannot see the liquidity readily, somebody should call me now. Please, I'm sorry, guys. Just give me a moment. Give me a moment. All right, so we have explained that if you cannot see the liquidity regarding where price is going at the moment, right, then you are most likely, yeah, I know. I believe you guys can hear me more clearly now, right? So if you cannot see the liquidity in the market, then you are most likely the liquidity. Now, here is a thought I want you to leave with, major important thoughts, right? Price action moves. I know I mentioned buying pressure. I mean, people buying at the other side, selling at the other side. Now, the idea, the brain behind the movement of price action, right? When you see price going up like this or coming down like this, I did not screenshot my trade on. Probably I will show the trade I took today on the crypto space. Similar stuff you're going to learn right now. When you see price moving up like this or down this way, primarily it is moving up to do either of these two things or both of them. So price moves up to either fill an imbalance or fair value gap, as the case may be, or it is going up to take out a liquidity. That means to take out a swing high, or it is going up to do both of them. The same thing happens if it's coming down. So your question every time you look at price, no matter what you use to trade, I'm not debunking your trend line or whatever you use prior to now. So again, I'm appealing if there's a strategy or something you want to add to your tool. You see the tool I'm using, right? Is this knowledge set that you are asking yourself every time you look at the price, every time you open your chart, where is price at the moment? Where is it going to with respect to fair value gap and liquidity? Now, because I am proficient in this method, I can combine both of them. But for this class, I am going to specifically teach along the line of liquidity. All right, because it's, in my opinion, one of the simplest you can apply, and you are going to be blown away with your own results. And I'm not even bluffing, right? You're going to blow you away with your own results. So, having said that, I will now take you to the advanced market structure. So take these scenarios. If you are drawing or writing down, you can do something like this in your notes, right? You are bearish this way. Okay, let me give us 3 scenarios, or let me give us 3 thoughts. So you are bearish, right? Please mute your mic. So draw this and note this as your scenario 1. I cannot write with this, so I'm just going to put scene 1. You are bearish. That's scene 1. You are bearish for scene 2. Scene 2. And this scenario 2 is my favorite, actually. I love it. I love seeing it. It happens every time. It happens everywhere. Scene 2. Then scene 3. You are bearish. Pulls back. Fails to take that low. Comes back. Takes it. Goes back. Take this last one and drop. This is not very accurate. This one should be high out to this point. So what they took out was this last. So scenario 1, you are bearish. Price, you know your BOS now. So you can say BOS, break of market structure, happened here. Price broke it, came for expanded, and then retraced back to take out the low right there. Take out the low. You want to be selling there because you are bearish, right? Because you are bearish, after a low right here is taken out, price returns back to take out the previous high, and then you want to sell the moment price takes that high without wasting time. You want to start selling, and it's going to give you a lot of pay. Of course, you can take some partial profits around that area there. That's scenario 1. We're going to see it from live chart, right? Scenario 2, price comes, takes out a low. You are bearish, right? You are bearish. Goes down, pulled back, created a high, came lower, so it took out another low, another BOS. Then it rallied back to take out that previous high. Once it comes here, you want to sell right here. And I said, this is my favorite. You want to sell right here, and your stop loss can be there. Stop loss can be there. Of course, you can put some form of take profit right there. Scenario 3 is just like scenario 2, but it happens that after the first pullback, of course, took out a low right there, pulled back, came, failed to take this one. I might even take it out or fail, whatever case, does not matter. Comes back, pulls back, break another structure right there. This one might even break structure. So it might be 2 break or 3 breaks rather. Break 1, break 2, break 3, as the case may be, pulls back, take out the last high, and then you are selling off that area. scenario 3 or scene 3. Now you can invest these for bullish movement. So we don't have time to invest for bullish movement. Now, the only twist towards these 3 scenarios are what you want to add is that you must be sure, right? That word sure. I counted 100% certainty from the beginning, just in case you didn't start with us, right? But you must have your bias that your price is bearish, right? In this example, or you must have a bias that price is bullish. Then you start looking for the opposite pattern that I just gave you, right? Again, scenario 2 is my A++ in these examples. So what I want to do right now, I want to show you a few examples, actually from what I traded this past week. So you see, we were not just sharing materials and all of that, but these are actual stuffs that happens any time frame, every day in the market, just trading liquidity, right? So my screen is going to load, right? So this is Aussie dollar. I think I did more of GBP dollar, right? This is GBP pounds, GBP USD. What am I saying? And this is the 4-hour chart. So you can get your directional bias from the higher time frame. That's standard. I'm not telling you to ignore the daily or the 4-hour. No more. Daily 4-hour, it's fine. Then you can, if you want to be an intraday trader, you can do the 15 minutes to get your intradays and then your entries and all of those other good stuff. Right now, let me zoom in and show you scenario 2 that played that, because I traded this on Friday. I'm not sure I shared the screen because I'm not, like I told you guys from the beginning, I do not like doing all of those. I got this, I got that, because you are not competing with anybody. There's enough money in the market space to go around for everybody. So all of those that puts, I just try, it's not easy anyway to actually be different, but you see, I try my best to actually not give people, especially newbies, those, because it takes a whole lot, right? Well, let's continue so I will not lose my train of thought. So this is GBP USD, a very simple trade using scenario 2 on Friday. This on Friday. So of course, if you are new to Forex or if you have been a veteran, you will know already. I deliberately not talk about time in this class. You already know the time you should be trading your markets, right? For example, you cannot trade GBP USD in the Asian session. Although you cannot, it's not just advisable. We want to trade during the London and the US session, especially if you are trading GBP USD or Euro dollar, right? Those are my 2 pairs basically, and I don't want to trade any other, right? So this first hour of the day is the Asian session. So you see it's more of a consolidation, more of consolidation. However, just before, let me be very specific with us. I want to wrap this up pretty soon, right? Let me be very specific with us. So I'm going to get London open. Oops. Okay. London would be 8 o'clock GMT +1. That would be 9 o'clock in my MT4. So this line here is London open, right? It showed when London opened for the day. Now, that means on Friday, right? On Friday. So just before London opened, what did price do, right? What did price do? We saw in Asia, we have a break of structure right here, right? Let's just do a quick drill, a very quick drill. These are not really that important. I shouldn't even start from there. I'm concerned with, I want to trade London. So, but you must know what price I've done before you know what you want to do going forward. So let's look at what happened during Asia. So you see price came down right there, broke that structure, right? Reversed or returned, pulled. All of these are basically consolidation. Then we saw a major break right there again. So I'm going to be rotating. I don't want my screen to be so messy. We saw a major break right here. Again, price reversed and came down. This could be like, if I go to 5-minute chart or 1-minute chart, that's actually a break of structure. I hope you will agree with that. And then it came. Now look at scenario 2. Look at it. Break of structure. Let me draw it out so you can see. Inside Asian. So I'm telling you not to trade Asian, but I'm telling you that this thing or pattern you're learning repeats itself. Down, up, it consolidated, went up, broke this previous high, and boom, that's what you see here. That's the high. Extend it. You see what happened? Came, consolidated, came down. Okay, broke this a little bit. It's like 0.3, came up, took this one out. You see? Now, the beautiful thing about trades like this, let me be frank with you, is the speed at which you'll be getting your results. If it delays, then you are most likely not correct. You'll be getting speedy and almost sniper entry. Imagine you entered there. Of course, I'm not saying you should trade, I didn't trade by this time, and your stop loss is above that high. What is the risk to reward? And I'm targeting this immediate low. So this is like almost like 1-to-1, right? So let me clean it out. I'm not doing 1-to-1. So took it out right there, and boom, take profit. But we're concerned with London. Look at what happened. In London, I was keen for the bearish movement, at least to pick something. But having seen all of these, London always want to start with, I didn't teach of price delivery because obviously this is a crash course, right? There's a material I'm going to introduce to you all if you want to take this up to another level. Obviously, there's so much one can do at night. There's what we call price delivery, where it's talking about what happened before price do what it wants to do. Accumulation, manipulation, distribution. What ICD we call AMD. Accumulation, manipulation. The purpose of manipulation is to make people to buy, and then distribution, go opposite their direction. Bam, punish traders. All right. So of course, I'm not doing that right now. So, but what I want you to see is that once it was London session, which is noted by this line, my attention was drawn to this last high created during Asian, right? Which actually took that high. So I was waiting patiently for them to take out that high. Oh my goodness. Well, I have tons of trades to share with you anyway. So I feel bad. I feel I should probably show you this entry. It was so beautiful, right? And this is what happened. Price came down. You see, I was not going to fall for all of these. Not falling for all of these, right? Not falling for all of these. Okay. I was waiting for that high. Boom. And I sold right there. My stop loss was still in that high, right? Stop loss was still above there, 4 or 5 pips. And I was targeting this last low created about 20 pips. Yeah, 24 pips. So that's about 1:6. What I tell you, 1:3 is my own go-to. In fact, one of my traders allowed to run. And when I started seeing something that will show you how to come out of trade, right? I got out of trade right there. So that's scenario 2. This, I haven't thought about it, but this is scenario 1. I was trying to let you know. I will show you scenario 1. I will tell you again how I knew I was expecting this bullish movement. I will go to a higher time and show you I was expecting a bullish movement, but we're not here to show expectations. I'm in this slide to show you the opportunities. Now, look carefully, and I told you to draw those scenario 1 in your charts and all of those stuff. Now, look at this low, right? Price took it out, went up, took out a high. Scenario 1 is quite difficult, but with training. Now, this replay will be at your disposal. With training, you're going to be seeing this things more clearly. What did we share about scenario 1? Let me give you that again. We saw if you are bullish now, the opposite direction, right? Price takes a low, takes a high, comes down to take that previous low and then expand, right? Takes out a low right here, expand to take out that high. But our concern is the last low formed, this low right here. Did it happen? Did it happen? Look at it. Beautiful setup. It happens over and over. If you look at that low, right? Now, it took out this low to form a new low. Then when it went up or expanded, it took out that high, right? And it came all the way down to take this low. Now, see the race it took the moment this was taken. Now, there's a name we call this, but you see, it's not the purpose for this class. There's a name we call this, actually an inducement. Took it out and then it is what it is. We're out of this movement. I didn't really participate in this early entry. I think I got in after the news. There was a news that Friday. Now remember what we started. I started talking about. I showed you fair value gap or liquidity, right? So let me show you a clean example, right, from this chart. Now, every candle you see, every single candle, note, let's study this green candle. Note the candle before it is the black candle. Note the candle after it is the green candle. So this surrounds this green candle. So note the high of that black candle and the low of this green candle. So in your mind eye, let me save your eyes, that's stress because of our time. In your mind eye, you can already see that there is a little bit of gap or right there. So if you spot this gap and you are a badass scalper, this is scalping, you are a badass scalper, you can actually go to 1 minute chart and sell into this gap. You see price return back, filled the gap, fill it completely here, and then started doing what it wants to do. It put up back and then kept coming down. That is a fair value gap that was rebalanced. So I told you, price going up, goes up. So either take our liquidity, like in this case, once you take our liquidity, right, or it goes up to fill a gap, or it comes down to do the same thing. Now, note this big candle that I sold or that gave me the money I traded on Friday. Note that the candle before it ends here, and the candle after it, this green candle right here, that's the high. So between that low and this high is an imbalance. So the very next candle came and tried to fill, but notice it still left some more imbalances, right? It didn't fill it come. So the new gap is not that area. What happened at the end of the day or before the day ended? See this one enter, didn't fill, but look at this news. Look at all of these. They ensured it is filled, right? So there is a way to trade with that. But my concern, like I told you, I am streamlining this class to liquidity. Let's take a few more examples. I will go to our slide and you'll be amazed. You might want to kick yourself because of these things, not some, all these things, I'm sure liquidity happens over and over. Oh, you can see how mesmerized this chart looks like. This was Thursday. This thing, I traded this one. So look at it. Asian session. This was the low of Asian. So London happened here, right? Price took out this low, pulled back, formed the high. I was not going to fall. I was waiting for that high now to be taken. And look at price came down, took out this new low, formed a new low, returned back. And once it took this one out, I am selling. Scenario 2, right? Like I told you, scenario 2 is actually my go-to setup. Take it out and boom, right? Take it right there, boom, take some profits. One very tight stop loss, 5 pips to 15 pips. See, if you are a day trader, if I go to daily chart, you will see the same thing happen there. But I like the fast trade. I'm a full-time trader. So I like sitting and take my opportunity, ramp my profits, and I'm out of here, right? So I take stuff like this and I'm okay. Sometimes, if you saw my status, as at this time, I was done with my with my trading objective for the day, right? You don't want to know the lot size. That's why I say we don't blow trouble. Now look at scenario 1 again. After it came here, right, a low was formed, a new low was formed, rallied up, took out a very important high. Now, because on its way to take out that important high, after I took the high, there was no pullback, right? Assuming after I took the high there, it pulled back, went up, I would have said, okay, the second pullback, we just take that low and then we continue the buy. But because there was no pullback before that high was taken, I already know that this low is going to be fished out for my scenario 1, so that you have scenario 1 again. This comes down and expand. So I'm going to be waiting to buy there, but I didn't participate. You see, because I know what I know doesn't mean I should trade every single time. You now learn what they call discipline, right? If I'm eager to trade, I would obviously be I'll go and do demo and I'm out, right? So this was Thursday. We had scenario 1, we had scenario 2, right? Now I was waiting for this to play out for my scenario 2 after it had taken that high that gone there. But you see, it didn't. So there are times you're going to miss trades. So this did not come down to my level, right? And this was a missed opportunity for me. And of course, if I'd taken the sell buy right there, you take profit right there. Simple setup, guys. Simple. Are you seeing? Okay, let me let me go to, so it's happening every time frame. Let me show you one that's really paid handsomely, and that's USD This is USD I don't really trade this that much. I don't really trade this that much, but I think one of our in-house team guys drew my attention to it, because if you start seeing this thing, you cannot unsee. This is more or less like a scenario 3 setup. Look at it, right? Look at that low taken out, induced, went up and took that high, right? Once it took this high, notice every low that was formed, right? This is the first low formed. All of these are lows, but I am not going to be buying from there. Why? Because from what you already know about liquidity and fair value gap, that's a huge gap. Excuse me. There's a huge gap from that level to this level down there. So I want to see this gap filled somehow, even if not the entire gap, at least up to 50% of the gap filled before I buy. And my stop loss will still be at that area. So when this happened, I was not falling for this. So on Friday, we had price come right here, right to the 50% level. My area stop loss was here. So if you are that not impatient, immediately it got here, it moved, and I took some profit in this first movement, came to 50% level, boom, profit. Once the news release came lower to completely fill the circle, I was buying here. And it's so beautiful to buy at that level, knowing that your stop loss is 3 pips, 5, maybe your stop loss is 100 pips. I don't know what you are doing. Less than 2 pips, and I am targeting, because from the higher time frame, I'm targeting a huge run. Let me show you as I wrap this up. From the higher time frame, this is the 4-hour time frame. 4-hour time frame. It happens. Look at it. This is a structure break, right? Structure, real structure. Once it broke, it formed a low right there, formed another low. Once this low came and took all of these, I am buying, made some profits, right? But that was last week, right? Into this week. But now, notice overall, we had a huge fair value gap from this candle's low to, that candle's high to this. So from that low to this high, it's a huge fair value gap. So if I get my 50% level, I want to see price come to at least this 50% level before I buy next. Why 50% level? I didn't teach about that. It's called equilibrium, right? Yeah, it's equilibrium. So this week, I was expecting price to come to that level. I see the reaction, sensitivity. But for price coming here, it does not mean I am buying. So it came here and reacted. Go to the 1-hour chart, and you will now start framing your entry. That was the level right there on Wednesday. We had Wednesday of last week. We had it come to that level, reacted back. It had not taken out that high, so we're still waiting for that high to be taken out. That high right there. Okay. And it took it out on Thursday, formed a first low. So this is the first low that was created after a major high was taken. So I expect it to be taken out for scenario 2. So, okay, I didn't quite get that. We had this low. So this low took out that low for scenario 2. And our buy started happening there. Smaller time frame, we have lows taking out. This was our new stop loss, and boom. See, guys, I can actually go on and on and on and on and on. Is it Euro USD? All of our time, I want to stop. So is it Euro USD? Look at Euro USD. The same thing I show you in pound dollar. I took this one on Thursday. Beautiful trade, right? I took one here first, then got my profits. When I saw this one coming up, I took this one again. Stop loss still remained there. Boom. I was expecting, look at this US session. Look at this pullback, up, down. It didn't really quite take our profits, but we got that movement, right? Now, there are times it may not do that, and that's where the skill come in. The mentality I want you to live with is, number one, price moves from liquidity to liquidity. By liquidity, I mean every time a low or a high is taken out, always expect some form of a pullback or reaction. It will be criminal for you to, what am I saying? It will be terrible for you to be, for example, now, let me zoom in and show you some. Some of you do this a lot. I used to do that when I didn't know what I know now. Price is running this way. That's taking a low, for example. I'm selling there. That is wrong, right? For example, you see price is rolling up. It just took out a break of market structure. You are buying. No, that is not where to buy. You shouldn't buy when price is close to breaking a structure or when price just broke a structure in any context. Well, the third secret, yeah, let me wrap with that. Okay, I if you notice, the third is actually combined two in one because of our time. Because I said your entry is everything. So I notice I started talking about entry, right? Why talking about this? Where you are entering, you are selling. Once the liquidity is taken out, you are selling. Your stop loss is in next liquidity, right? The only twist to this is that be sure of your direction. Now, I don't want to say too many words so you don't get confused, right? So you don't get confused. Know when to buy. Look at it again during Friday of. You can see this line. I put it here just before this class. You see, London opened, price came up, took out that high. Look at fair value gap here. I am selling there. I am selling there, right? I'm selling now. It's crazy how this works. My chart is filled with so many of these examples. Now, if I am not going to be seeing, though, probably you have a one, if you have a going to be having one directional move day like you saw on Wednesday in euro dollar, you now want to be trading off. You see the same pattern happen there. Price broke structure here, went up, formed a low, went up, break under structure. This is the low that I want to see price take, scenario 2. And you see it came back, took it out, and reversed immediately. Boom, boom, profit. You're taking your profits right at that high, right there, right? But if I don't want to be taking all of those, I'll be looking at fair value gaps being filled, right? Fair value gaps being filled. Look at the space right there. I could be buying right once this candle came here and take profit there. Now, this may not look much to you, but how would you feel if you can actually be making steady? I don't want to use the word again. I don't want to give that because I said a lot of things when we started, right? But this is an edge, my friends. This is an edge. So let me go over and share one final thought with you as we put this class to a close. Have you learned at least one thing so far? Can I get L for learn? And L for learn, and L for learn. At least if you have learned one thing so far in the class or in this session, can you give me an L? So let me know you are not sleeping off on me. Sheon, thank you so much. All right, great. Thank you so much, guys. All right, so it's important, you know. Now one thing that will make this knowledge work for you, you have to make it yours. I don't have my MT5 or my trading view. I would have gone to crypto. If you are trading crypto, you can go check Arbitrum. Today is 29th of April, and you can go see the sale that happened in Arbitrum USDT in any chart, and then look out for pattern 2. I use that to trade Arbitrum. I mean, in futures, you can trade futures. That's my point, right? So if you don't want to trade forex, you can go trade crypto with this same stuff because it's liquidity. The market is all about liquidity, guys. It's all about liquidity. So it moves from liquidity to liquidity. Let me see if my slide will allow me or if it will cooperate. If it will cooperate with me as I wrap this class up. I don't think it's going to cooperate with me. Let me do this again. I'm exhausted already, and let's see. Okay, guys. So I have shown you. Oh, okay, let me take this in out. All right. So I've shown you the true market structure, and that is where I talk about scenario 1, 2, and 3, right? And I called it a secret. But like I said from the beginning, it's not really a secret like secret. It's there. It's there, and it's been there. It will always be there. Oh my goodness. Why am I having this discrepancy? Please, will you allow me finish up? Because there's something very important you still need to know as we put an icing on the cake, right? And so you would agree with me that the past hour, right? You would agree with me that it's been a time spent well. And I promise you, when you take this replay and go back and just do a little back test with what I just showed you, you'll be blown away. I promise you, right? Would you agree that it's been a time spent well? And you also agree that Even if I have all day, I cannot cover everything. There are some things obviously that are important, but because of the target for this webinar, I couldn't touch them. And you will agree that one night is not doesn't suffice. So I'm going to make a special offer, right, for not for everybody, but for just a few persons, right, that will cover everything that you need to basically know. And if you're going to act fast, it's going to be one of the best deal you have ever had in your trading journey. Yeah, that's a guarantee. Yeah, that's a guarantee. Now, I am currently making it's currently on a pre-launch stage. Pre-launch, you can see I don't even have a logo for it already. I don't even have a description for it. But I'm currently making a training or series of video. I tag it or call it, it's a course basically, Forex Endgame 2023, right? And Endgame because I have the end in view with the mind that no one who partake or has this course, right, will actually desire to take up any other course trading the financial market. Forex, I'm focusing on Forex, but obviously you can see you can use your knowledge to trade crypto. So what would this? I've already written out all the outline, right? You are going to learn the big six, right? There are six other things. I've given you two. There are four others that you need to know that is explained in this course. There are six of them. We've learned two, but there are four others, and module one will focus on these. They are just basic that you should know. Then I will take this structure liquidity to an advanced level. Now, what you have gotten tonight is it suffices, but we're going to put more depth, right, to this. Notice we didn't talk about scenario 3 that much. Okay, we'll talk about scenario 1, but it's going to be advanced. And model 2 will cover all of that part. Then I kept emphasizing that until you have your bias, you cannot just go and implement what you are learning. So you must know what price is going to do. That means you must be able to at least, not 100%, to, I already told you that not 100%, but at least you must have a view. You must have a direction bias. And there is a way to detect it from 3 angles. And these 3 angles, I'm going to cover that in module 3. This is currently under production, right? 3 angles of getting your bias. And then module 4 will focus on all about your entries. There are 4 of my A++ setup. I have explained about 2 of them. There are 2 more you need to know. Okay, I did one. I explained 2 for you basically. There are 2 more you need to know. And module 4 will focus on framing your entries. I'm talking about the A+ entries and things you need to know about your entry. Like I told you, the secretary, your entry is everything. If you enter wrongly, you will get fried out, right? And module 5 will focus on practicals. And I love this a whole lot. Practicals, number 1, how to grow any account, how to grow, even if it's a $10 account, if it's a $5 account, come on. It's, when I said I felt you need to have $1,000 to trade for it, in as much as that's true, because you need to, the return will be equivalent to what you put in. But the truth of the matter is that if you cannot grow a $10 account, you cannot grow a $1,000 account, right? And the other practical is how to pass a prop firm account. Practically, you're going to be learning how to take trades tailored for prop firm. It's not the same with trading your personal account. There are things you look at for in prop firm. So module 5 focuses on these practicals, and module 6 is all about psychology. We started with psychology, and I put it last. I like to start with it, but this time in course, I'm putting it last, because everything you're learning now, or you're going to watch replay and learn, will either come together or fall apart once module 6 or psychology is wrong. And trust me, guys, I am going to put in everything that I have learned within my 6 years journey, the greatest part of 3 years, right, into this. And you want to really learn from, not just from talk, but from real-time experiences. Again, this is a pre-launch, and the total value for this is $299. But you see, it's a pre-launch course, right? Because there are other things we are adding to it, but you're not paying $299. Please. And of course, if you have been here for any length of time, you know this course is for, if you are a newbie, we have a session for newbies. You want to learn trading from the scratch, we have a session for that. If you have struggled with consistency before now, and you want to scale your trade to the next level, then this course is for you, or this is for you, right? You want to be consistent. It's not about getting $1,000 profit and then you're giving it away the next day. No, consistent. There's a wait for it. And finally, it's going to fit you. If you have a point, you feel you have a point to prove, Probably you have been ridiculed. You're even ashamed to tell people you are a trader. I've been there. Come on, I've been there. I told you my story. But if you have a point to prove, you feel somehow that trading is going to work for you, then this course, Forex or trading end, I'm going to change the name to trading. Forex end game is for you. All right. Now, I actually had two choices. The first was to go as cheap as possible and bring in as many persons and all of those stuff. And the second option I had was to make it a bit pricey so that I can actually guarantee your source, because I do not want this to just be a course that you get and then you're on your own. Because I chat with some persons today, they talk about one of the problem people have is not just having course and material, but you see that's follow up, that continuous someone that will give you that push and all of those stuff. So this is not designed to just be a course, okay? Even though it's a course, but there is something else I'm adding, and that is mentorship. All right. And of course, if all this will do for you, again, I showed you this from the beginning, not a fan of blowing trumpets. You could see from the far left or far right of my screen, a Nigerian currency 3.7 million naira withdrawal. You could see by one of our students, you could see trade happening. You could see Toby giving his own testimonial, how he's now, by the way, Toby is now currently a prop firm trader, right? And it doesn't take so much, you see. If that mind limitation is broken, there is absolutely nothing that can limit you, right? There's absolutely nothing that can limit you. Imagine 3.7 million naira. Actually, it was a 5 million naira withdrawal for the weekend, right? So again, you have known all that the cost entails. But I'm going to, like I said earlier, 1 year in our practical mentorship, right? Now, this whole year from now to 2024 of March, you're going to be in that cohort sort of, where when I trade, you're going to be learning, seeing the stuff, what we expect before then. Again, you need the right community. That's just the point. So, and it's going to be for, of course, whether you're watching the replay or you're live for first 30 persons. And then I love this a lot. You earn while you trade, right? Some of you have not withdrawn anything from trading before. And that's why just before this class, we gave a 10s challenge stuff in the group. Whether you are there or not, this one it's almost related, but you're going to be having free signals from us. Now, this one is just to spice the deal. The main deal is that you learn how to do this yourself. But well, it's a bonus for you. And again, all of these would amount for, now, if all of these courses, mentorship, signal, if all it did for you was to ensure you grow your account consistently on your own, would it be worth any amount or investment? If all you get after a month with me or 2 months, you find out that you can now trade and make result for yourself and grow your account, would that be worth your investment? Well, I think so. I think it would be worth your investment. If all it did for you was to help you pass your prop firm account and earn between 500 to 10K monthly, would your investment be what? Would it be worth it actually? All right. And what about becoming your own money multiplier? Like I told you, I made about 3x my account in futures trading, Arbitrum today, right? Just before this class. So you don't need to bring anybody to buy your goods. You don't need to, you know what trade is all about. You don't need anybody to come buy. You don't need to post on social media, come buy my product before you make money right in your home. Now, if the knowledge you're going to get can help you multiply your money, right, without looking for people, would that be worth your investment? Well, I thought so too. It's not for everybody. So I don't know what financial freedom is to you, whether it's 5K, 25K. Probably when you get 25K dollars, you say, okay, I'm financially stable. You know what it means to you and what you are willing to pay to get to that level. I don't know. We are all different, right? So you can feel that in your mind. And just to let you have an idea, in the past, our mentorship of such quality falls within $149 to $499. But this is special meeting. And for a handful of you tonight, you're not going to go anywhere around that level, right? You can see why people pay up as high as $299 to get my course, the previous course we did, and even $199 our last general sales, right? And because it's a pre-launch class and you are special, this is the gift I told you, if you stay with me from the beginning, right? So people that may not be here may not have this opportunity. Trust me, right? Because you're special and the pre-launch price, you're going to get access to everything I just mentioned for a one-time fee, pre-launch fee, I should say. And it's going to start for these 7 days that we have in our website. So what you want to do right now, it's going to go for $49 or 30,000 naira for Nigerians. Click or type this link in your browser right now. You can do that right now. Okay, www is right there on the screen, golfcoursefs.club/mentor 2023. All right, it's right there on the screen, right? Type that in your browser, go to the web page and lock in your slot. It's a one-time fee, and most probably you may not see that. Now I'm adding something else to you, to this pack, right? Um, there's a template I use in, of course, I talk about trading passing prop firm account, right? There's a template you use in that I use personally, I give to our high training students to pass prop firm account. Now, this is going to be a bonus for if you are taking up this offer of $49 or 30,000 naira for between the next 72 hours, right? It's going to be given as a gift to you. Normally, people that pays higher amounts are the ones we give this pack, right? So is a bonus. So if you want to get access to all of what I talked about, all of the courses, type the website in your browser, golfcoursefs.club/mentor 2023. There is all the instructions you need there, the account details, everything you need is on the web page, right? And everything to get you onboarded is right there. And I actually have one more gift to give to you because I want to ensure that it's actually the end game for you, right? Now you have two choices. If you are listening to me right now, you have two choices. The first is actually to do nothing and then just go off, and you are going to be, it's 100% risk free to do nothing, right? But if you want to up in your game, you're never going to see this at this price ever again. So you want to take up the investment of $49 and make this count for yourself. So that's the two choices before you are presented. So, and of course, there is money back guarantee at all of those. You have the website, and please note this is a pre-launch price. Once this is out by the first, second week of May, right, at most, the fee increases to $149. We're not bringing it down. You know why? You see, trading can pay you without getting money from anybody. So we're doing this as an extension, right? If you like, to help us. So you have all of what this is entails over right in your screen. The model 1 to 6, the 1 year mentorship, the trading signals, and all of those stuff, and then the bonus. Now, for those that would initiate the payment between now and the next 24 hours, you're going to get one of my special. These are hot selling products. We have two of them actually. The one trade pattern machine, and actually authored this book. No, when I said this, I say I'm an author. I authored this. There's a pattern there that you can use without any other stuff talked about in this book. And then another one called overcoming drawdown. When you are in drawdown, what do you do? How do you come out of drawdown? So those are the two hot selling books I'm going to pack in for you. For those that this is just for this one. Assume you don't see it's just for 24 hours. So if you make a payment in 24 hours, you are going to get this one. So it's not in the stuff. Please, I'm almost there, right? So now what I want you to do right now, if you are taking up the offer, I want you to give me your name, probably type your name and probably your WhatsApp number in the comment section, right? Your name, your WhatsApp number, so I can actually follow up and I'm going to request from your email when we send you a message on WhatsApp, right? I'm about ending the call. If you are taking up the offer, please stay muted. I don't know. If you're taking up the offer, type your name and WhatsApp number right now in the comment section or in the chat, right? I'm hearing some noises. I don't know where the noise is coming from. So if you're taking up the offer, taking up on this offer, pre-launch, yeah, your name and your WhatsApp number, so I can actually get some stuff across, right? Okay. If I can get, okay, so I'm doing that right away. So having said all of this, thank you so much for your time, and most probably the replay will be sent in the group. Yeah, I've seen your name, Mr. Emmanuel Daiko. Yeah, I've gotten that right. Great. Please type it generally in the chat, not personal. Don't send me personal, so people can actually see. The website is actually there. You can visit that right now and take this up. Actually, when we get up to 5 persons, right? Not 10. We already have a group running. When we have up to 5 persons, for this stuff is going to close out on this because it's actually a pre-launch. I cannot even believe I was kicking myself up and down, putting it at $49. It's actually very crazy. A fee, and it's a one-time fee for all of this. Yeah, Bello, Habib. All right. I got that. Okay, great. Thank you all so much for your time. If you have any question, my DM is always open. I am going to end the call right now. The replay of this will be sent for the rest of you that probably could not take it. Maybe we are going to still meet some other time. You may get the replay and all of those stuff. And those of you that had the website is up there, whether you are live and all of those stuff, we are going to continue maybe in another phase. Thank you so much. Please do the replay. The third secret. Why are you asking for third secret early on? I already told you your entry. Ethel, I told you entry is a third secret. Your entry, and I explained entry. Watch the replay. You're going to get it, and you see I talked about the third secret. Trust me, right? All right. Thank you so much, guys, and have a lovely night rest. Man, it was over an hour. I didn't want it to be this long. I hope you gain a thing or two and implement. Those of you that I collected your details, please chat